these users are always changing. I'd love to lease space and keep a tenant for 30 years. That doesn't happen very often. Even that tenant themselves, their business models are going to change. The business demand is going to change. They may need more or less space. So we just try to create a building that is as flexible long-term as we possibly can.
From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
Andy Hodges, welcome to the show.
Yeah, thanks for having me.
It's good to see you. Hey, for the audience to say, who are you? Where are you from? What do you do?
Again, Andy Hodges, Signature Commercial Real Estate. Born and raised here in Des Moines. Grew up on the Northeast Side. After high school, went up to Buena Vista University, Northwest Iowa, small school up there. Studied banking and finance, and then graduated there in 2002. Came back to Des Moines. I guess I have a lot of redneck hobbies, so I didn't venture too far. A lot of my friends and others, as you know, kind of Chicago and other spots, maybe after college. But came back here in 2002, started a principal in their principal asset management within the real estate division. It's called PREI, Principal Real Estate Investors at the time. So that's where I got my start in real estate. I was there from 2002 to 2008. Obviously, we know what happened in 2008, financial crisis. Principal is a great place to learn real estate. I'm a sports guy, so it's kind of just a great place to learn how to block and tackle, the fundamentals. Had two great mentors there while I was there. But unfortunately, the financial crisis hit, went through some layoffs there. I was fortunate enough to make it through those, but it just made me think about things. I worked at Principal. I lived in Des Moines, but I was traveling out east. I'd been recently married and just started thinking, I don't know if I want to, I love parts of the travel. I don't know if I want to keep doing this my whole career. So started looking and landed at Signature Commercial Real Estate.
Tell me about asset management. So there at Principal, what, for some of the audiences, like, what does that mean? What would you actually do?
Well, obviously, Principal being a financial services insurance company, right? They're bringing a lot of money in.
That's right.
So they then take that money, those assets, and they put them back out. I was in the real estate division where I was on the debt side. What I was doing was taking Principal money, other third-party life companies, other capital providers, and taking that money and putting them mortgages on commercial properties out east. So I had New York City, Long Island, and my career in Boston. So we were lending on office, warehouse, retail, flex, property, apartments out east. So it was an interesting time at Principal from 2002 to 2008. A lot of activity.
Tons of activity. It sounds like you ran the gamut on asset classes too.
Yeah. It was a great place to learn, right? I mean, Principal really focuses on the bricks and sticks. Yeah. You certainly looked at the borrower. You looked at your tenants, right? I mean, all those, you look at the overall marketplace. They made you learn how to look at the bricks and sticks, the functionality of the real estate, the age, right? The condition, just all that stuff. Yeah. So it's just a great place to really be able to look at a piece of real estate and really understand it. But a lot of activity. I mean, there was a lot of money flowing into real estate at that point, right? Real estate was continuing to become more of a preferred asset, right? Part of people's asset allocations. It was, the CMBS market was growing quite rapidly at that point.
Right.
But as you know, what continued to happen as things with the activity and the growth, underwriting conditions kind of continue to erode.
Correct.
Principal wasn't really part of that. I mean, obviously Principal being a life insurance company, more conservative by nature. Yeah. Certainly are aggressive on select deals. There's an equity side too, right? So there's money coming into Principal where they're also buying assets or partnering with people on assets in those same markets. So you had to sharpen your pencil and get more aggressive on certain deals. But, some of the stuff that we were seeing done, and, the same thing was happening on the residential side at the time, was, 10-year interest-only deals, a 1-2 cover on year 5 income. Wasn't what's actually in place on the property today. It was based on what we think will happen 5 years from now. Yeah. So a lot of things that we didn't get caught up in. But, looking back, you can see now how we got into the mess we got into in that time frame. So just a great place to understand the markets, understand real estate, figure out how to look at borrowers, different markets, all the analytics that are out there. But for me, I love New York City. You love Boston, especially, you're first out of school, you're single, you're out there traveling, having fun, going to games. Yeah. But I'm a Des Moines guy, always have been. Yeah. I was like, I like this. Yeah. I want to keep doing this. But I don't know if I want to go to New York City and Boston the rest of my life. So I started at Signature.
Made the change.
Made the change.
So you went to Signature, and then what was the role? What did you sign up for?
Well, I initially came in as, and still my primary core responsibility, basically the marketing and leasing of their portfolio.
Yeah.
So Signature, again, local, family owned, been around for 40 plus years. Current portfolio is probably just over 1 million square feet. There's been some changes there in the last few years. They do everything in-house, right? So our asset management, property management, for a period of time, even construction was all done in-house. So they brought me in to basically be their leasing agent, their broker. So I was immediately broadcast a bunch of 4x8 signs across the market on about, at the time, over a couple million square feet. And my job was to sell ground, find investment opportunities, and lease space.
Still space, primarily industrial focused.
Yeah, I would say at the time, our portfolio was probably a third that flex industrial type space. Mm-hmm. When I first started at Signature, from say 2008 to probably 2018-ish, something like that, you probably saw us developing more retail. We had done some neighborhood centers in West Des Moines. We had done a power center there in Jordan Creek. It was the Hobby Lobby, Dick's Sporting Goods project that we partnered with Richard Hurd on. So I think you looked at our portfolio, it was more industrial, flex type stuff, warehouse. But activity-wise, that time frame was more retail. So I was doing both. I was obviously leasing the existing portfolio. Right. We were developing new retail product and leasing that up at the same time. But we acquired parcels over that period of time too that are now developed, that were some were retail and some were that industrial warehouse stuff.
Fair to say you lean into what the market is showing you in terms of what reveals itself and where you can take action and put a project together?
Yeah, I think so. We're not really diversified from a geography standpoint, right? Signature is Central Iowa. So we try to diversify from a property type standpoint. Mm-hmm. We try to see where the market's heading. We try to capture some of that momentum. So we picking our spots, right? Sometimes the market's right for industrial. Sometimes it's right for retail. So we try to pick those spots the best we can. Yeah. Sometimes we get it right. Sometimes we don't. I mean, I would tell you there's projects that were in our portfolio that are performing very well. But when those were first developed, it took some time, right? I mean, it took some patience and some staying power.
It's an imperfect science relative to delivering a new product to market.
It is.
If you could deliver it tomorrow, you could probably turn it into a perfect science, but that planning period takes a while.
Yeah, I think, people drive around and see this, the commercial real estate development. And yeah, to your point, they got to realize this, it didn't happen overnight. A lot of stuff you see, that could be a couple of years in the making, right? From the time that you acquire that ground, you get all the entitlements, you figure out what you're going to build there, how you're going to market it, who you're going to use. It's a process. I got to be honest, when I left principal, I was on the debt side, so I'm putting mortgages on mostly existing property.
Yeah, right.
I didn't fully appreciate that timeline.
Yeah.
So when I first started, I think Dave Hansen, who's the president of Signature, will probably tell you, I was a little impatient. I didn't get that full process. Yeah. So it's been fun watching, being on the other side now, kind of behind the curtain, watching the goodies get made. And you come to appreciate, what we've done and what others have done across the metro, because the effort it takes to, and then the risk you're taking. We probably take, most of our stuff is speculative. We don't really have a lot of pre-leasing typically on developments we do. We have, but usually we're in a position where, thankfully, I work for companies in a position that says, hey, we have the land, we believe in what we can build here, we're going to go build it so people can see it, touch it when they're ready for it, and then we'll put them in the building. So, some would shy away from that, or would say that's a little riskier. Yeah. But what we found in this market is it helps to have something that somebody come touch, see, and feel. There's
no doubt, I would imagine, it expedites the time frame when they can touch it and see it and feel it to make a decision.
Yeah, it helps, right? I mean, they know you're real. They know the property is there. There's less uncertainty on what needs to be done. We have ground that we do market today that we have some concepts on. Yeah. It is more difficult to get action right away on that because there's still some hurdles or things that need to be done before that tenant. And the reality, from what I've seen, and maybe not everybody in the market would agree with this, but it feels like these businesses, these tenants, every year it seems like they leave themselves less time to make that decision. Mm-hmm. They're waiting to the last minute, or they need less space or more space, right? Or move markets or whatever it may be. It feels like they're leaving themselves less time. Yeah. You might have a piece of ground that's ideal for them, but it's not an option for them because they may have 90 days for that to get out of their existing location. Right. So we have had some good success in landing tenants like that we have good options, but their options are limited. And here we have a building that's ready for them.
Hey, Iowa investors. This is Ava Baukamp, Chief of Staff at Legacy Impact Investors. Have you thought about adding real estate to your portfolio but don't have the time or desire to play landlord? At Legacy Impact Investors, we do the heavy lifting. Our team finds the deals, manages the properties, and handles all the day-to-day operations. Our select group of qualified investors co-invest with us, gaining ownership equity without opening a tenant email or responding to a maintenance call. They just share in the income, appreciation, and tax benefits. These opportunities aren't for everyone. They are for qualified, accredited investors only. If you want to learn more, please visit legacyimpactinvestors.com to apply.
When you put up, maybe give an example of a flex or industrial that you past recent projects, what kind of size range do you put these things up? Meaning for a tenant's choice?
Well, we've done a few. We've put up 3 buildings recently out in the Northeast submarket. We put roughly 200,000 square foot buildings up in Bondurant. The first one started in 2021. Those were more your traditional, what I'll call modern warehouse, maybe 28-foot clear. And obviously some guys are still, building 32, 34. Yep. We didn't see that need in this market. We felt like 28 was more than satisfactory for the types of users in the market, but 210-foot deep building, 28-foot clear, base sizes are roughly 10,000 square feet. I think the one unique thing about our buildings, it's probably the more expensive way to build a building, but we've always tried to build a building where we can accommodate those smaller users. And what I'll say is 25,000 square feet or less, right? We can demise, now this Commerce Crossing I was referring to, those can be demised down to 10, but we have other flex industrial properties that can be demised down to 6. But the unique thing that we have in our properties is that each bay has a dock and a drive-in. So it gives those smaller tenants who may need that dock capability, that option. So the last 3 projects, again, the first one was Commerce Crossing, and that was 200,000 square foot buildings, fully leased today and occupied. But again, 10,000 square foot bays, 20-foot clear, dock and drive. And then we went across the street in Altoona and built a little different style building, more of a probably true flex building. It's not quite as deep, 160 foot deep, 24 to 26 foot clear. Probably accommodates more of the showroom office type user, right? But it also needs that R&D or warehouse area. But again, the unique function there is that it gets dock and drive-in. Yeah. So, say there you get that building, we could accommodate a 12,000 square foot user. Well, in that scenario, they get 2 drives and 2 docks. Yeah. I would say in this market, that's not common.
I would agree with
that. See that in
a
lot of buildings.
Right.
So that has helped separate us from a lot of the other options in the marketplace. Now, again, more expensive way to build a building. But, the one thing about us is we're long-term holders too. So a lot of the stuff you see us build and develop, it'll probably be in our portfolio for 20, 30 years. Yeah. I mean, there's stuff in our portfolio now that they've owned since the mid-90s. So they take great pride in maintaining the property and holding it.
How does that fact influence what it is that you construct?
Well, I think the first answer to that is I think you probably see us build a slightly more expensive product. I think that at times we probably try to incorporate things into the building that some might say, is that necessary, right? Does it need to be that clear height or do you need dock drive? We try to probably makes us put some things in the building that gives us the utmost flexibility long term because these users are always changing, right? I'd love to lease space and keep a tenant for 30 years. Right. But that doesn't happen very often. Even that tenant themselves, their business models are going to change. The business demand is going to change. They may need more or less space, right? So we just try to create a building that is as flexible long term as we possibly can. So it's maybe looking out, maybe a couple of years ago, it was, putting ESFR in a building when it's not required yet. I think those requirements are probably coming. That'll become more common, is becoming more common. Right. But just those trying to figure out those types of things that give the building a long shelf life. Now it's inevitable at some point as you own a building that long, you're going to have to go in and do something to update and modernize the building.
Interest rates move very sharply, very quickly. How did that impact you guys from a planning perspective?
It's slowed down. I mean, we hit a little bit of a pause button, I guess, with not only interest rates, but construction costs. Sure. Those two things combined, we have seen rent growth in this market, right? I think we finally in the last few years have started to see some rent growth. I go back, I think warehouse probably maybe 5-6 years ago, something like that. You probably could still find decent Class A space in that $4 to $5 net range. That's closer to $6.50 to $7 today. Right. A lot of that growth, I think, has occurred in the last 5 years. I mean, so we've started to see that. So that's certainly helped kind of bridge that gap. But I think you combine interest rates where they've gone and construction costs, you haven't fully bridged that gap. And I think that's why you've seen the pause.
Yeah, you've seen a lot of pause across the total market, right?
Yeah.
Just putting the pencil together. What's my rate? What kind of construction for? What kind of lease it for? And one of those 3 things, if not 2 or 3 of those 3 things, something's got to give.
Yeah, it's hard to all, and you've had others on the show here, and I mean, others say the same. It's just hard to pencil out right now.
Right.
I mean, it just is. Or you just take less of a return. There are things where maybe you make some exceptions here or there. You remove this part of the building or something like that, where you try to make it work. But that's not a concession, we want to make.
Sure.
In our position, we'd rather just hold off until things get back to normal spot.
Yeah. When you look for the, balance of year 24 into 25, what do you think it looks like? Let's stay in industrial world. What do you think it looks like here in the central Iowa in terms of construction and then maybe some of the leasing activity that's taking place?
Well, go back through right after COVID, the numbers made sense, right?
Sure.
Money was still cheap.
Yeah.
There's a lot of money out there. Construction costs were a lot less predictable and moving up quite rapidly, but a lot of things were planned, a lot of things were constructed, a lot of things have gone vertical. So the industrial market has certainly softened. I mean, the leasing velocity has slowed down.
Yeah.
I think I read somewhere that maybe a third of our market has been constructed in the last 8 or 9 years. I think that in the last 3 or 4, we've added close to 6 or 7 million square feet of industrial space across the metro. So what is that? A little over 2 million square feet a year.
Yeah.
I mean, usually our marketplace is probably more in that 800 to a million square foot range, roughly. So I think we've worked ourselves into a soft spot here. I think leasing velocity is down. I think you're starting to see maybe more concessions. That pendulum has kind of swung back to the tenant. So I think construction will be, you're going to see some deliveries this year. I think you'll see construction in 25 fall off quite a bit. Very few, if any, deliveries. You'll see some build-to-suits. Des Moines is still a stable enough market, strong enough market, believe in long term. So you'll still see some activity there. But the big stuff that you've seen built in the last few years, that'll slow down. I don't know, if you look at past absorption, it may take a couple of years to work through that. So I'm hopeful that as hopefully interest rates come down, inflation, interest rates, construction costs, the election, all those things create a lot of uncertainty.
Correct.
So all those things have caused, I think, what the slowdown that we're seeing. And you and I were talking before we started here that I think that slowdown seems a little more extreme right now just because of, like we talked, the market we came out of.
Yes. Came off a peak.
You come out of COVID a few months, and after that, it was off to the races.
Correct.
So it feels maybe a little more extreme than it really is. But I feel like if we get some clarity in the election, I think construction costs have become more predictable. They're not coming down, but I think they're more predictable. Inflation slows down here. It's going to give people more clarity. So I do think in 25, you'll see, again, just my opinion, but a lot more planning. People starting to talk to their engineers and their architects and looking at their ground and sniffing around for ground and starting to plan projects. And my hope is that maybe by 26, you'll start to see some renewed momentum on the industrial side.
Take me back to the retail side. Are you guys actively participating in the retail market today? What does that look like?
Yeah, we're smaller from a retail standpoint. We sold some assets. Like I said, we don't usually sell, but the last couple of years we have sold some stuff. We have one retail center out there in the Jordan Creek area. But yeah, I think we've had some recent discussions about looking at some retail opportunities. I think we'd certainly like to add to our portfolio from a retail standpoint. Retail has, I still think overall, it seems like it may have a little bit of a negative perception, but it's come back quite strong since COVID. Especially,
very robust.
Yeah. Especially that, I think all of it, whether it's junior box, power center, down in neighborhood centers, but these neighborhood centers that you drive around town, you've seen a lot of that's been built. And so far that stuff is doing quite well.
There's a number of things that Amazon will not replace.
Correct. And people I think what we realize is that I know consumer habits have changed.
Yes.
E-commerce, all these things are real. They're here to stay. It's impacting the industrial market. It's been a benefit.
Yes.
At the same time, people like to get out, see other people, buy things, touch things, see things. Yeah. Right. I buy stuff on the internet, certainly, but I like to go out and try things on and just see what else is out there, see the displays and get out there during Christmas and see the activity.
Yes.
That's not changing. Right. People miss that.
Correct.
I think after COVID.
Well, it came out and you saw it in the economy. The connection's a big deal. You need getting out and participating, right?
And the entertainment concepts.
No doubt.
The services, right? The point, Amazon can't replace that. That's not going anywhere.
All the restaurants that are there. Yeah.
Yeah. No, I have seen a little bit of softening there. You've seen some closures. You see some sublease opportunities right now. So, I think retail's a tough game. Restaurants, that's a tough business. Some of it only has such a long shelf life, and then something comes in and replaces it.
Well, the American consumer, is ever changing.
Oh man!
So fads come and go, and retail is there to reflect. Yes. It's often a sign of the times.
Yeah, I think it's on the retail side for us. The important is just being you got to be in the right location.
Yep.
Right. There is retail that's struggling, and those are, maybe the older centers and, those B, C type locations, right? You need the traffic counts, you need the income demographics, the access, all those things.
Yeah.
Right? And there's centers out there that, maybe they haven't been mismanaged or whatever it may be, and they're struggling. But a lot of this new stuff and the Class A stuff and, out there in Jordan Creek and Grand Prairie Parkway now, and you go up to Grimes and Norwalk. I mean, a lot of these retail areas are doing quite well.
If you're a house flipper, execute the burst strategy or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
All right, so you grew up on the north side. You played football. We battled each other long before we actually knew each other.
Let's not talk about that.
And then you went to BV and played there. How did growing up on the north side and how did playing football, how do those things impact and help shape you for what you do today?
Well, it teaches you to compete. Our business, it's a lot of Class A personalities are out to compete. They're out to win.
Yeah.
So, being in sports, it teaches you how to compete. What's your process to make sure you're successful? Setting goals, right? All those things, kind of looking forward and seeing, where do I want to be? What do I need to do to get there? How to work with others, right? I mean, I guess unless you're a wrestler maybe or something like that, anything you're doing is a team sport. So you're dealing with a lot of different personalities and different coaches along the way. And I think it helps you kind of grow that personality that you have. So sports, I tell my kids all the time, I hope they all play sports. I don't care if they're good at it or not. I just want to be involved in sports because I think it teaches you so many things about the real world. You got to learn how to lose. You don't want to lose. You don't ever like losing, but there's a lot of lessons from that too.
Yeah.
More North grads, right? So I love the place. I wouldn't change it. A lot of great people, but I had to learn how to, you put in the effort, you put in the work. Didn't necessarily see the results in high school, right? Not a lot of wins, but the effort, the work, paid off. I got to go play college, small school, nothing big, but I had the opportunity to go to BV and play 4 years up there. And that doesn't happen if I don't continue to have goals and compete. Again, surrounded by good people in North too, right? I had some good mentors there, some good coaches along the way. And then go to BV and where you have some success and, meet some of the best friends of my life and just a completely different experience. So.
For you, you could do what you do anywhere. You choose to be here. Why Iowa?
Well, first would be family. I have a lot of family here in Central Iowa, close to my family, mom, dad, grandparents, aunts, uncles, nieces. We're all close. So hard to leave that. My wife is from Garland, Iowa, which is a partial town, so she has family here too. But then, I think just the business climate. It's a stable economy. We don't have the big upswings or downswings, right? It's pretty steady. I think we have some great public partnerships. It's very diverse from an industry standpoint, right? So, I think it helps us when we're looking at all the different types of real estate we build and where we build it. All the communities work well together, right? They compete. I get it.
Yep.
But they're also, I think, a lot of times very open with one another and they strategize together. And I think you see that paying off around the metro. And again, I'm redneck on the weekends, so it'd be hard for me to go to Chicago or New York City or something like that and do what I love to do.
I've often viewed the communities competing with each other like restaurants. A restaurant often does better when it's surrounded by other restaurants. And so when we can get bodies into a community, ultimately all communities are going to benefit from it at the end of the day.
Correct. Yep. I agree. I wouldn't want to do this anywhere else. I've been in other markets, great markets, exciting markets, right? New York City, Boston, like I've said earlier, I have great memories. But this is just, it's from here. It's a fun place to be, great people, and just a lot of opportunity.
You ready for the final 3 questions?
I'm ready.
All right. If you had one piece of advice for your 20-year-old self, what would it be?
20-year-old self. Oh man, where do you start on that? In my 20s, I'd say it's okay not to know everything. I think when at that age, I think you need to know everything to get the approval from maybe others in the workforce, older people in the workforce. Sure. I think what I found is that it's okay to say I don't know. I think some of the bigger pickles I've gotten myself into when I was first getting into the workforce, or even maybe back in college, is acting like I knew something that I didn't. And also, I tell this to younger brokers too, when I sit down with them when they first start, that don't get intimidated by, respect the people that have been in the business for a while and have had success, but don't necessarily be intimidated by them, right? There's a lot of smart people in our business. So I'm not saying there's not smart people, because there are a lot of smart people, but a lot of what they have is acquired knowledge. They started where you did.
Yep.
Okay. They've made mistakes, right? They failed. They've learned from it. You do the same. But again, don't come into this thing acting like you know everything, because you don't. Right. I get the fortunate opportunity to work with some very talented people at Signature, and they've done this for a long time, and they'll admit they don't know everything. I think you learn something every day in this.
No doubt.
Every property is different. Every piece of land is different. So that's what I'd say is be okay not knowing everything and admitting that you don't know everything.
Yeah. 2 books that changed your life.
I'm not a big reader, Neil. Maybe I should admit that publicly here. I'm not a big reader. Never have been. So
consuming book
publication. I do some podcasts.
Yeah.
More industry specific stuff. I read a lot of stuff on like globestreet.com. CoStar is a big source of information for me. There was a book, Damn Right, which is a biography about Charlie Munger, which I would highly recommend. Just a lot of things to take away from a business standpoint. I mean, obviously a very smart man.
Yes.
But very grounded, I think, as I read that. I mean, just you look at his background and how he was raised and his beliefs. It was a fun book, a very fun, entertaining book. I'd recommend that.
If you were cast away on an island for a year, you can only get 3 pieces of data about your business each and every month. What 3 things must you know?
Rent roll. I guess I'd want to know, how's the portfolio doing? And I guess I'd combine that with maybe income and expense statements, that kind of thing. Just, hey, how are the properties performing, right? What's terminations look like? What's rollover look like here in the next 12 months? And those types of things. Market reports. I think JLL and Cushman Wakefield, CBRE here locally do some great market reports. So I'd want those just to understand what's going on by a quarter basis. Yep. Business record. Those are things from a business standpoint that are important. Absolutely. I'd want to know, stay up to speed, what's going on in the market. And then the third would be just, I guess, our people. We're a small, skinny shop. For what we own and manage, I would say we're a pretty skinny shop. So we have some really good people. So I guess I'd want to know how they're doing, how they're feeling, how their families, because without them, we can't do what we do. Can I do a disclosure if my wife listens to this, that obviously the first thing I want to worry about is the family, but from a business standpoint, those are the 3 things.
In this scenario question, she's there with you.
Okay.
I'm perfect. This has been a fantastic conversation. We could converse all day long, I'm certain. What's one question that I did not ask that I should have asked?
How about a fun fact? Can I do that?
Yeah, I love it.
I share this with some people, but when I was, growing up, I don't do this as much anymore. I still get out and bike a little bit, but grew up in a family that loved to bike. My grandfather loved to ride, my grandma and my grandfather, and they did RAGBRAI. So I did my first RAGBRAI about halfway at the age of 8. And then when I was 9, my dad and my brother went with us. Yeah. And I did my first RAGBRAI every mile, every day on my own bike. So I guess a little bragging here, but I have to admit, something he'll hold over me for the rest of my life. My brother's a banker here in town. Okay. But that same year, he rode RAGBRAI every mile, every day on his own bike at the age of 7. So he got me. Yeah, he'll have me on that forever. That was a fun family memory. We did RAGBRAI for many, many years. So fun little fact.
That's fantastic. Yeah. It's been a great conversation. I appreciate you coming in. Say, for people, they want to find you, they want to follow you, they want to connect with you, where can they go? What should they do?
Well, Signature has a website, signaturères.com. And then we also have a LinkedIn page and a Facebook page, which those are all linked up on the website.
Links are below in the show notes, everybody. Andy, appreciate you being here.
Appreciate it, man. Thanks.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the 2 of us to get on the calendar and connect. Until next time, keep investing in Iowa.